to achieve carbon neutrality by 2050 and respond to the 2030 targets set by the global stocktake, emerging and developing nations will require significant boosts in renewable energy investments. Mobilizing investments in those countries presents a unique blend of challenges and opportunities. In this session, we will discuss best practices for guiding green investments.
Welcome to our speakers, and as I said, we will be focusing here on fast-tracking Africa's energy transition. And Sub-Saharan Africa, as I think many in the room surely know, does hold enormous potential for harnessing renewables, including no less than 60% of the world's best solar resources. And in a region where 600 million people still lack power, renewables offer a crucial path to expanding access to clean, decentralized energy, and therefore, of course, also to growth. Yet, despite its potential, Africa is home only to a very small fraction so far of installed renewable capacity, and it attracts just 3% of global energy investment. By far the largest share of burgeoning financial flows go to developed countries. In the course of the next hour, we're going to be exploring with our esteemed panel how countries eager to accelerate the energy transition can join forces with financial institutions and international partners to unleash additional financing. We're going to explore both challenges and success stories and ask how innovative financial products and policies can spur project development and expand the pipeline of bankable options for investors. Our panel brings together esteemed political leaders and development partners, all of whom are working to fast-track the energy transition. It is my pleasure to introduce them, beginning here with His Excellency Alex Kamau Wachira. He's Principal Secretary in Kenya's State Department for Energy. Wonderful to have you with us. And I'll just jump over to Dr. Kandel Yonkela. He is chair of Sierra Leone's Presidential Initiative on Climate Change, Renewable Energy, and Food Security. He formerly served as United Nations Under-Secretary General and Special Representative of the Secretary General for Sustainable Energy for All. And he has headed the United Nations Industrial Development Organization, UNIDO. It's wonderful to have you with us. Welcome. It is a great pleasure also to welcome Dr. Rebecca Mazaromula. She heads the Green Hydrogen Just Energy Transition Project Management Office under the auspices of the South African Just Energy Transition Investment Plan that was signed at COP26. And the Hydrogen Project Management Office is being established as South Africa's single point of contact and coordination for public and private green hydrogen initiatives. Welcome to you. And we're very honored to have with us Mechthild Woersdorfer. She is Deputy Director General to the European Commission's Director General for Energy, with responsibility for coordinating international partnerships in the context of the European Green Deal. And she previously served as Director of the International Energy Agency in Paris. Thank you so much for joining us. Before we launch the discussion, we would like to get your opinion, dear excellencies, ladies and gentlemen. So please take out your mobile devices and go to our Slido website. And here's our Slido question for you. And this one is a word cloud. So just type in the phrase or words that best answer this question, which is, Sub-Saharan Africa holds enormous potential for harnessing solar and wind energy, yet advancements in installing turbines and panels have been slow. What are the main barriers? And we're going to come back to this result in just a moment. So let's now take a look essentially at the same issue. I'd like to ask all of you to share your experiences in practice and tell us what you see as the main obstacles holding back acceleration of renewables development in your country or region, or in the practice of your organization, and what solutions you believe show promise in practice. And I'll start with Principal Secretary Wachira, if I may. And in fact, Kenya has made very significant strides in increasing electrification rates and renewable energy adoption, and you're striving for 100% clean energy by 2030. What are the challenges you've experienced, and in your view, what are the policy measures that you're finding most effective to reach this ambitious goal?
Thank you very much for that very good question. Let me start by saying, yes, that Kenya, we have an ambitious target of reaching 100% connectivity, first of all, by the year 2030. And that has been pronounced from the top level, that is His Excellency the President, William Samoei Ruto. Secondly, we have Vision 2030, that we are talking of having 100% clean energy by, again, the year 2030. And also, other than the clean energy, we're also talking about clean cooking. So there are two things here that we are talking about. Now, to make this achievable, there are several things that Kenya has done, and they are meant to ensure that we reach this target. Number one, we have been able to unbundle the electricity system in Kenya. If you were there in the 80s, for example, we only had one utility company that was doing generation, transmission, distribution, and rural electrification. Today, as we speak, we have about 7 utility companies. We have a generation, and in generation, we do have about 67% of our power coming from the main generator, which is government owned, and also 33% privatized. Secondly, we do have IPPs that are able to to generate 33% of our power. What have we done to ensure that we take care of the interests of the IPPs? Number one, we enacted the Energy Act 2019. The Energy Act 2019 looks at having a cost-reflective tariff, because for any investor to come in, that investor needs to be assured that they are going to recover their investment. So we have, to ensure that we have that cost utility tariff, then we have an independent regulator who is tasked in ensuring that they do look at the interests of the investor, but ensure that the interests of the investor do not override the interests of the consumer. And so therefore, it's a tough balancing act, because the regulator is supposed to be independent and take care of the interests of those two. So the Energy Act 2019 created a cost-reflective tariff. We have now a very good independent regulator. Other than that, to ensure that we have, because Kenya has 47 devolved units, for those devolved units to speak with the national government, we have what we call the Integrated National Energy Plan. And we map that with what we call the Least Cost Power Development Plan. The Least Cost Power Development Plan is a plan that we have between today and 20 years. It's a 20-year generation and transmission master plan that models and says, looks at the energy needs of the country and what do we need to bring on board to ensure that we continuously meet the energy needs of the country and ensure that we have security of supply. So we have ensured that we bring on board private capital by ensuring that we look at their tariff. And to couple with that, we are looking, because we still have a challenge. At the moment, we are around 76% electrified. That is access to electricity. We have rolled serious plans at a cost of about $465 million this year and next year to take care of last mile connectivity. And I want to thank the funders who have been able to help us: African Development Bank, World Bank, JICA, European Investment Bank, AFD, they have come in handy to help us in accelerate the last mile program. But we still have a challenge in two areas. One, the off-grid areas, which requires a lot of massive investment to take the grid to where they are, where people are in the sparsely populated areas, realizing that Kenya has about 72% of its land size that is on arid and semi-arid areas. So we need more investment in that area. And now we also need more investment in PPP projects in terms of PPP projects so that we can do more transmission lines to ensure that we strengthen the grid, not to mention the capacity building. Because we need to bring more, increase the capacity that we have. Yes, we have good personnel, we have a good labor force, but we still need to enrich that labor force with capacity building.
Thank you very much. I started waving at you a bit about the international partners because I want to come back to exactly that issue a little bit later on. But as I understand you, looking at the challenges, you have essentially the challenge of balancing considerations of access and affordability on the one hand and attractions to private investors on the other, and a delicate balancing act there. And again, we will pick up on that as well. Dr. Yumkela, Sierra Leone also faces major energy access challenges, particularly in rural areas, a similar issue to what we've just heard about from Principal Secretary Wachira. What are you doing to unleash capital in Sierra Leone to help address those?
Well, first of all, we've launched our Just Energy Transition Plan in November last year. And we collaborated with a number of international agencies, International Renewable Energy Agency, Sustainable Energy for All, World Bank, and others to develop that plan. It's a 10-year plan. We want to add 1 gigawatt of power over the next 10 years. Our mining sector alone, that is expanding rapidly, needs at least another 500 megawatts in the next 6 years. So there is demand, but we have a plan about how do we achieve that demand, including both bulk power production and also decentralized energy. So first having a plan, so everybody knows where we want to go. We're in conversations now on the tariff formula. We also want to establish a clear tariff that will allow this cost-reflective tariff, but also help government make a decision if we're going to do decentralized energy solutions, what levels of subsidies will be necessary. So a plan, a clear tariff formula. In addition, we have a very good IPP policy. We've been able to attract a number of independent power producers. We have several of them now doing solar projects, selling to the government, Planet Solar, Serengeti, a number of them are established. We have all our mini-grid operators are all private. But we've also attracted bulk power production. The latest deal we closed last year was $420 million for a gas-powered plant for about 104 megawatts, supported by the DFC in the United States. So our IPP policy is very transparent, very clear, and companies are responding to that. Looking at the Just Energy Transition Plan, as I said, we want to add 1 gigawatt over 10 years. So what are we trying to do in the next 3? First of all, in the next 12 months, we want to add 80 megawatts of solar. Yeah, the World Bank is doing 40 megawatts, and IFC through Scatec, the Norwegian group, is doing another 40 megawatts. We want to add that immediately. In the medium term, 2 to 3 years, we have other companies that are taking a look at our hydropower potential and our solar. Infinity Power is looking at possibly 80 megawatts on the banks of one of our rivers. We also have 65 megawatts being looked at now by Africa 50 and a private developer. So we have short-term, immediate 12 months, another 3-year set of projects we want to bring alive. The good news is our country was blessed with a lot of water. I say to my Norwegian friends, God gave them wind, God gave us water and sun. We want to develop our hydro potential. For us, that's the best alternative we have. You can get that at 5 cents a kilowatt hour. And for our country, we're not as rich as our Kenyan neighbors, but we need to have tariffs that will allow more social inclusion. Yeah, so we want to lower those tariffs. Our tariffs are like 21, 22 cents. It's very, very high. So this is why now we're doing two things. One, we have a major decentralized energy platform. We want to do 500 more mini-grids over the next 3 years, 3 to 6 years. And for that, we're very pleased that the European Union is launching a program very soon in 2 months to do about 60 of those. We've also qualified for the World Bank DARIS initiative, Decentralized Access to Renewable Energy Solutions, where we'll add probably another 150 mini-grids in the rural areas. But the tariff is a problem. Mm-hmm. Our mini-grid tariffs now are like 60 US cents. So the poor pay more than the rich people in the cities. How do we deal with that? And so with this new EU program together with GIZ, we're going to do a lot of capacity building. We're going to launch a results-based financing tendering process now to bring in more private sector mini-grid operators. We're hoping that competition will lower the tariffs for the rural people. So a number of initiatives going forward. We've revised our mini-grid regulations. Those are going to Parliament now, incentivizing more duty-free for all solar technologies coming in. That's an incentive we're introducing. I tried this year to waive the GST tax, but that did not pass. But next year, we're going back to fight for that. So we're trying to incentivize as much as possible private sector operators to come in, especially for the decentralized energy solutions. But our hydro potential, we've done all the feasibility studies for about 4 major dam locations. These are all runoff rivers, very limited environmental impact. But biggest obstacle, guarantees. So that's why we're interested in the new German Green Guarantee Scheme. Mm-hmm. A number of private sector are interested. The Kenyans hosted an investment forum for several of our countries just last year. But a number of the private sector guys who came there said, we like your feasibility studies, we want to come in, the policy is there, but we need guarantees.
And we're going to come back to that point again when we do a deep dive on international partnerships and how they can help. Let me go over to South Africa now, Dr. Mazarumula. South Africa is positioning itself as a key player in green hydrogen development. So tell us a little bit about the challenges that you face in doing so and what you're doing to overcome those relatively high risk premia that I mentioned at the outset of the panel.
No, thanks so much for that question. When it comes to producing hydrogen, either creating derivatives like ammonia and green steel, it goes down to cost. And I think if you look at the levelized cost of hydrogen, hopefully not to get too technical, there are certain inputs into that. One of that is the cost of your renewables, which, like I said, we do very well. We have great renewables, solar and wind. You have the cost of electrolyzer, which is coming down with economies of scale, but the cost of capital is really a huge barrier. And this is just not for South Africa, but for most countries on the African continent. We're looking at double digits when it comes to the cost of capital. But the way we're looking at that is, first of all, reduce project execution risk, having skills in the country so that at least your workforce doesn't bring up the cost. But really, I just started my new job at the IDC 7 weeks ago. I worked on the government side. But really, when it comes down to practical solutions, if you don't get the right type of financing. So it's not the total amount of financing, but the type of financing you receive that's important. So really, we're starting out with grant funding for feasibility, pre-feasibility studies, because you don't know, you can have a pipeline of projects, but about 15 to 20% of those projects may only be viable, and you need to figure that out with grant funding. But then once you get that total pipeline down to the 10-20%, then is when it comes to concessional financing that comes forward, and then that concessional financing will make sure that the levelized cost of your hydrogen is lower than if you started with full financing. But then also it means that your development finance institutions have to have people who are qualified, who understand the sector, who understand how to partner with international DFIs and so forth, or multilateral development banks to get these huge projects on the ground. There's just the total cost of the projects is sometimes in the billions of dollars. And really you're not going to get that with just money with DFIs on the African continent. You need international DFIs. But also I think when it comes to these projects in terms of the timing, like in Africa, sometimes our capital projects take much longer than necessary. That also increases the total cost. Again, it goes down to skills and ability to execute projects and EPC and procurement. So in South Africa, having this green hydrogen PMO is really around reducing those risks, making sure that we all have the same information, even as you hand a project off from pre-feasibility to feasibility to FID to even operation and maintenance, that you have one office that keeps the finger on the pulse to make sure that information does flow from one team to the next. But then also I think what's critical is that we have those honest conversations. So our role is not to replicate other people's actions, but to make sure that everyone's talking and having the conversation necessary. And then last but not least, when it comes to regional conversations, like we're having close conversation in Namibia around shared infrastructure, these conversations are also very important. Like I said, we may be doing bunkering in Saldanha Bay, but if we have a shortage of hydrogen on our side, we may have to go across the border to get the hydrogen we need to meet the demands.
Right. Thank you very much. And now to Deputy Director General Verstoffer, and we've heard quite a bit about the importance of international partnerships here, and I'm hoping you'll pick up on that, but also tell us about the existing challenges that you experience in your work, and perhaps a word when you talk about the partnerships about the current effort to align the EU's existing initiative, which is scaling up renewables in Africa, with a new Mission 300 that you're working on with the World Bank that also aims to fast-track the provision of clean power to, I believe, 300 million Africans. That would be half of the total number that need it.
So first of all, thank you very much, and I'm very excited to be here and also listen to the previous speaker. Maybe just a word also how we are doing right now in the EU on renewables, because we have seen a boom since the invasion of Russia in Ukraine 3 years ago, that we have shifted in an unprecedented energy crisis, completely facing down Russian gas. And the only opportunity there, we saw 3 consecutive boom years for renewables. Already in 2024, we saw 78 gigawatt of new installed solar and wind in Europe. So we continue that way. We have a new commission, the same president, new commission, new commissioner. So renewables remain competitive, sustainable, and also secure, because we speak a lot about security of supply also in general. Just to start with, that remains a top priority to accelerate. We have a 2030 target which we want to achieve. And when I was listening, I think there is a lot of communalities also when it comes to planning. I heard a lot. There is the national energy and climate plans our EU member states have to do, how to reach the targets for renewables, what are the intermediate steps, what is needed, what are the obstacles. Grids is very much mentioned, permitting, the length of the project, the financing. So I think there is a lot we can do. Then, as you say, there is a partnership, first of all, with COP 1.5 years ago to triple the renewables and double energy efficiency. The President von der Leyen launched the Global Energy Transition Dialogue or Forum a month ago in Davos, which we are helping to implement that tripling of renewables for those who sign, and there are more than 100. And then last week, the President was in South Africa, and there the initiative you mentioned, which was launched at November in G20 last year, More Renewables for Africa, was now, I think, in a very good way combined with the World Bank initiative of the 300 million getting electricity access by 2030. So there's a challenge we have to deliver by end of this year, so the next G20 summit. So there is a challenge to get that done, but it can only be done together. So we, from the Commission, we work with the World Bank, with all the partners here, and I think our international partnership is on one side regional, and I like what you have said as well, that the regional aspect to look not only at one country, but at the region, because it has an impact, speaking about hydrogen, speaking about grids, about renewables, and then obviously the more bilateral partnership with specific countries. But to get that initiative announced end of last year on renewables in Africa, combined with the World Bank 300 million access by 2030, I think it makes sense a lot, because we can combine forces from the EU side with our expertise, money, global gateway, what we have, with the World Bank, who has a huge experience, and then get that done. So the stock taking is in end of the year in South Africa's G20.
Thank you very much. Dr. Yumkele, you want to add?
Sierra Leone has qualified for the Mission 300. So we are working on the compact. I came here from Washington. We've done the initial draft. We're supposed to take the draft compact to the spring meetings and then hopefully finish it by June, and we will launch it in South Africa at the Africa Energy Forum. So we're well connected with the Mission 300. The targets there are more ambitious than we had. For example, our electrification rate is to go from 36% to 80% in the next 6 years. Tough order, but we're determined to do it. Clean cooking, from less than 1% access to clean cooking to about 30 or 40%. We have to do some transmission connections as well. So we welcome the Mission 300. We think it's an additional impetus and boost to really driving clean energy revolution in Africa. So we're looking forward to collaborating with the EU and other partners.
Thank you for adding that. Let's take a look at the Slido result from that first question now, please. Could we get the results up on the screen? So we had asked what you, dear audience, see as the main barriers to accelerating the potential of renewables, and right in the middle of that is, not surprisingly, financing in the largest number of you answering with that. Also, you have said bureaucracy and lack of investment funds plays a role, high financing costs, and then cost of capital, so clearly seen as the central challenge that many countries are facing. On the other hand, we do have a few other factors as well, including technology, marketing, lack of demand and or industrialization, off-take, similarly, storage technology, political stability. Several of you talked about the importance of reliability in political frameworks. Clearly, that's part of this. Political will, we see here. Respect, that's an interesting one. Transmission network, turbines, so infrastructure as well. So a host of factors, but financing right there at the very center. Let me suggest that we now do a second round of questions in which we drill deeper on innovative approaches to mobilizing additional finance. And I would perhaps start with another Slido question. If we can get our second Slido question up on the screen, please. Then here are some of the examples we came up with about potential instruments or approaches that might help to solve the financing challenge. And our answers, and this is a ranking, please, if you would, are expanding the use of blended finance instruments, strengthening regulatory and political frameworks, offering tax incentives and investment-friendly policies, or enhancing local financial ecosystems for green finance. And I'm wrong, by the way, it's not a ranking, it's a multiple choice. So go ahead and answer that, and we will start talking about some of the potential instruments now. And Principal Secretary Wachira, as a former investment banker, you are very well acquainted with the demands of international markets. So let me ask you what you would see as the most innovative instruments that we can be using to meet this finance gap and bring down the cost of capital.
Let me start from where my friend from Sierra Leone left. There is a very critical point in which he brought out, I'd initially brought it out, that when you look at what is happening in Africa and the development of private mini grids, we have a few in Kenya, we don't have many in Kenya, but we are facing the same challenge that Sierra Leone is having, where you find that private mini grid, the price in which they are selling power to the ordinary Kenyan, vis-a-vis the price in which the national utility, KPLC, is selling power, the difference is 5 times. Yeah. So why that huge difference? It all has to do with financing, whereby this investor who has put up a mini grid has to recover their financing within maybe 10 years. And their cost of capital, the interest rate, is in the double digit. So that is the first thing that we need to address, the issue of capital. Let us have blended financing. And in Kenya, we are facing that challenge. And also, in our region, we have Africa right now, we are the leaders in geothermal development, where all the geothermal fields that have been developed that are generating are owned by the national utilities. That is KenGen, Kenya Generating Electricity Company, and Geothermal Development Corporation. We still have many concessions that are in the private hands. However, those concessions in the private hands, they require a lot of investment for them to de-risk, because drilling one single geothermal well will require about $3 million. That capital, the private sector is not able to access. And the importance of geothermal, for example, right now we have an interconnected grid from Tanzania all the way to Ethiopia, and Ethiopia is connected to Sudan, Sudan connected to Egypt. Geothermal is one resource that runs as a baseload. It is one resource that is not subject to climate change. It is one resource that can be able to help us industrialize and power the Eastern African region. And now with the 3 power pools having now been interconnected, that the Eastern African power pool, the Southern African power pool, and the West African power pool. Because these 3 power pools are now interconnected, though they still require more investment for them to get their transmission grid network seriously interconnected. If we have a serious drought, the resource that can be able to save Africa, other than hydro, is geothermal, because it's a baseload. So we need more investment, concessional financing, to go to geothermal development, even for those private parties. We need that investment, again, to go to private parties who are doing the mini-grids, so that I'm looking at vast countries. For example, if you look at DRC Congo, by the time you develop a grid to connect entire DRC Congo or Sudan, then you need a lot of infrastructure. I was in CAR one year ago, and they need that. So we need concessional financing, we need blended financing, we need climate financing, and we need to now move to action, because we have talked. We have talked, last year I was here, we have talked, now we need move to action. Secondly, we need also what we call capacity building. If I look at the power infrastructure in Germany, for example, the development that is happening in solar, or in Denmark in wind technology, and in Kenya, for example, we have wind technology, you have solar technology, and we need to integrate that very well. We need capacity building for our engineers so that we can be able to integrate the grid and bring more renewable sources to our grid. Thank you.
And we saw skilled labor as one of the word cloud examples. Before you put your microphone down, let me ask you to talk about APRA, the Accelerated Partnership for Renewables in Africa. Kenya actually hosted the very first APRA meeting, I believe, last year. And APRA is clearly aimed to do what all of you have talked about, namely improve collaboration and connectivity within Africa. So can you say a little bit about how you think that this is an African-led partnership, how you think that can make a difference in addressing some of the challenges that you're facing, amongst them the financing challenge, but others as well?
Allow me to marry APRA and Mission 300, because the two are working hand in hand. Mission 300 looks at halving the population that does not have access to electricity within the next 5 years. APRA is looking at accelerating now the generation, the investment that is going to renewable energy. In Kenya, we have already hosted, and we are offering the office to set up. And after that, we are hoping that we can now be able to pull all the international financiers to come, and then we do what we call blended financing. Once we have blended financing, then we'll be able to address the need, because African countries do have the need for increased investment in renewable energy. And not only renewable energy, but also in clean cooking. Because Africa, we have a challenge. In every 4 meals, only one is cooked with clean cooking. 3 we use wood fuel, biofuel, and we need to move our population from using all these technologies. So APRA is going to help us, and for me, from where I sit, APRA is our call to action. Mm-hmm. It is our call to action. It is what is going to help us now move from the boardrooms where we are now to the field and ensure that we do connect our people to electricity.
Thank you very much. Call for action. That sounds a lot like the impetus that you talked about getting from Mission 300, Dr. Yumkela. Let's look at our Slido poll result, and then I want to come to you to talk a little bit about Sierra Leone and APRA. You are also a member, of course. Could we get the result of our second poll? Interesting. So actually closely tied here, I would say. Strengthening regulatory and policy frameworks is the choice of most of you, but nonetheless the majority is fairly small compared to the others. Enhancing local financial ecosystems for green finance had the second largest share, and then offering incentives and investment-friendly policies, which of course in a way is a subcategory of number 1. And then use of blended finance, they're actually at the bottom, perhaps slightly surprising to some of us. I might have thought that would be higher up. On the other hand, as we've just been reminded, we've been talking about blended finance for a long time, so a lot of this is about making it happen in practice, and that perhaps is related to those regulatory and policy frameworks. Dr. Yumkela, Sierra Leone is also a member of APRA. So what are you expecting from that participation, and what do you think African countries should prioritize in order to maximize private sector resources, whether they are domestic resources or DFIs? What would be your answer, for example, also to this poll question?
First of all, indeed, our president joined President Ruto to launch APRA. I was part of the design team. We've already started benefiting from APRA. We had a rapid assessment of our renewable energy policies in Sierra Leone by IRENA quickly. We were not a beneficiary of Danish aid, but because of APRA, the Danes also moved fast to help our utility look at loss reduction. They deployed experts very quickly. Some training came in, all within 6 months. And in addition, they're providing some funding through the EU now, because they don't have a presence in our country, but they're passing the money through EU for more mini grids. So APRA, in our case, within a year, kicked off very fast. We're looking now at the next phase. Because we have these good feasibility studies done by some of the most reputable international firms you can find for our hydro and solar potential. We're hoping through the APRA mechanism, we can in fact deal with some of the issues they've raised there on financing. For me, I want to agree with my sister from South Africa. Grant financing and concessional financing is going to be crucial for those pre-investment stages. It is very expensive to do some of these feasibility studies, environmental impact assessments, and so on. You're going to need grant money to get that pipeline running. And we need many more projects to come into the pipeline. Also to make them bankable. We have had projects where best technical work was done, but investors tell you they're not bankable, they're not in the right shape. So how do you right-size them? How do you make that ticket size attractive with all the relevant information that is needed? Concessional financing is going to be crucial. The cost of financing, as she said, is still very high. I like the point they made about developing the local ecosystem. Our own local banks are not investing in energy. Yeah, we're borrowing money to help the government tide over our tight budget situation. But real financing from our local banks, they're not there yet. And I think that's a missed opportunity we have. So I think some funding and support needs to be directed to encourage them. And by the way, when I used to come here to Germany in my UN days, Germany and others did the same for Eastern Europe. The old issue about energy efficiency was not a big market in Eastern Europe. I know exactly the stories from EIB and from EBRD, what they had to do, because I chaired some of those meetings here in Europe in those days in Brussels with Commissioner Piebalgs. Yeah? You had to help those Eastern European banks understand how they structure those deals, and then the market boomed. Yeah. We need a similar intervention. Maybe not in South Africa. You guys are very advanced now. But for the rest of Sub-Saharan Africa, we need to develop that local ecosystem so our own financial institutions, even our pension funds, can get involved in financing, for example, as simple as DRE solutions. Maybe the bulk power as well.
May I just ask you in follow-up to that, the bankability issue, is it also a capacity building issue? Is there a need for more training also for local financial institutions to be able to generate those bankable project offers?
Yes, the bankability has a capacity building component of the technical skills needed to really take the project ideas to that level. It also has to be with understanding and training within the financial systems in our countries to understand how to structure those deals. Yeah, and I believe also it has to do with risk perception sometimes. You know, our countries are looked at too risky. I mean, the most innovative financing we've received last year was this gas-powered project. Yeah, DFC had to combine their money with the ECOWAS Bank that provided the risk cover for that project to go through. Without that structuring, it would not have happened.
Right.
DFC required that comfort. We cannot give sovereign guarantee, so another financial institution had to step in. How do we get more of that kind of collaboration amongst DFIs? That's why I believe Mission 300 is going to be key, because it's a combination of DFIs, some bilateral or multilateral support coming in to deal with all of those issues you raised there. Mm-hmm. They're all important, and I like the way they were, at least the last three were ranked almost the same. They're all important.
Yeah.
It's all of the above.
Yeah, exactly. You had to add?
I just want to add one point or two, that on bankability, then comes in the question of the integrity of the PPAs. Because for any investor to come in, then he has to have a bankable PPAs. And for you to have a bankable PPA, then that speaks to the integrity of the independence of the regulator. And that is something that in Kenya we have managed to do. We have a very independent regulator, strong, but it's something that we want to urge all our African countries so that they can be able to attract this investment. They need to have a very independent regulator, and then of course PPAs we need 20-25 years so that this investor who comes in can be able to recoup the investment in that number of years. Then lastly is the issuance of a letter of support. from government, because government has to give this letter of support. And in Kenya, we have also another product, the ATD, the African Trade Insurance, that is able to also give kind of a guarantee to this investor, just in case there is a challenge, you can be able to recover your investment. So those are some of the innovative ways in which we are helping investors to make the projects bankable.
Long-term purchase power agreements, PPAs, of course, a very key part of that reliability piece that you talked about earlier. Dr. Mazrumula, South Africa's dedicated H2 fund is a blended finance instrument, and it works with international partners like Germany's Kreditanstalt für Wiederaufbau. Could you tell us what's innovative about your approach? Could it prove a model for other African countries that are also seeking to fast-track economic growth through renewables and possibly hydrogen?
No, thanks for that question. One of the things that, we're talking about, you need the right finance at the right time, fast enough so you can move things quickly. And I think having funds that you receive from other countries, and that actually encourages your own government to put their own skin in the game. So it's almost like South Africa is now looking, specifically the IDC, to find South African funds to match, or not necessarily fully match, but to bring also money to the table as well, because it shows promise. You want to have ownership. And then even what I would say, the process, we always talk about source and secure. So source means there's an announcement, and then only almost 10 to 12 months later, do you finally actually receive the funds, because you have to negotiate the conditions of the receipt of that. And I think through the negotiation process is what you learn, what you need to do in order to understand. And in most cases, the discussions are around, okay, if we're going to produce hydrogen, not only for export, will need to be some domestic consumption. But then in order to get to that percentage of domestic consumption, we need to understand our needs in our country, what our demand is, how we're going to create a local demand that makes sense, that the companies in South Africa can afford them. Do you bundle, do you do it in such a way that your project is co-located with demand so your costs are lower, and so forth. So can it be replicated? Definitely. And I think it should be, because I think it's, if a country is dedicated to moving in that direction, you may not have the full amount. So, in South Africa, our goal is by 2027, December, to raise about $200 million of grant funding for green hydrogen, and then an additional probably $1 billion plus for just concessional finance. And part of that is we're going to put our own money on the table, because just bearing in mind that South Africa, we actually, the DFI I work for, IDC, we invest mostly in South Africa, but also in the other parts of the African continent for growth. But I think that if you put your own money in, it allows you to have your own voice at the table around the conditions of what that financing should be. But then also, I think last but not least, one of the reasons why I think South Africa has done well is because the speed at which projects go on the ground, we're trying to speed it up. So, for instance, when it comes to renewable energy projects, we have what you call renewable energy development zones. So we've already gone in, we've looked at where in the country where we have the best resources, but at the same time, we look at this protection of biodiversity. And sometimes I think that conversation is missing, that, with wind turbines, you can have, if you put them in places where you have migration of birds and bats, you're affecting biodiversity. Ecosystem services is actually very important for rural communities. You cannot upset that aspects, as well as issues of carbon sinks with land use and so forth. So I think that if, as countries, we go in and we use the science to protect biodiversity, that will slow down, that will speed up your EIA processes, that saves money. But then also, second to that, I think even as we progress in the system, the capacity of our of the decision makers in finance needs to improve. So, like programs like PTX around what is the cost of a levelized cost of hydrogen? At part in the value chain, does the cost come from like electrolyzers versus PV versus logistics? This is all important information that needs to progress through to the financing institution. So when people bring projects forward and 50% of the cost is on logistics when it should be 3%, that's a red flag. So they know that the due diligence process is sped up. So I think I would agree with the colleague that the capacity building, not that you have to know everything about technical, but you should know when to raise flag on projects so you don't waste time on the due diligence process.
Thank you very much. You've emphasized time in both of your answers, and that clearly is crucial because we don't have a lot of time to try to reach the goals we're talking about. Deputy Director Verstoff, you mentioned Global Gateway, and we've talked about a couple of different initiatives that the EU is introducing to try to speed things up. But tell us a little bit more about how you see the role of any or all of these initiatives, not only in providing innovative solutions to the financial gap, but also speeding the transfer of technology and the build out of infrastructure. And I might add that clearly this has gains for the EU as well as for Africa.
Yeah, absolutely. And I just was listening on this renewables acceleration areas, how you called it, and we had the exact same debate, just a side comment, where you can put wind or solar, others particularly suitable, have one environmental impact assessment, not project by project, but for the zone, and then go ahead. And we saw a success story also in Germany and other parts in Europe, that the permitting time for those projects went down from years to less than a year. So just on these acceleration areas when you can define them. Global Gateway is one of our top priorities, and for Africa and the energy transition, we have 150 billion euros earmarked for Global Gateway in Africa. It's more on the large-scale project, so I think it's in addition to the needs of local environment and what you discussed, and I think you are better placed on that, but the Global Gateway is about large-scale renewables project, interconnectivity you mentioned, in infrastructure, grids, and I think there we have very good examples in different parts of Africa where we spent the money together with our African partners. And I think this is our flagship, and energy is one of the crucial topics. And that reminds me also on the questions from the Slido on the blended financing system. We strongly support that, blending the financial instruments, but also I like the policy and regulatory framework stability, and that is true wherever you want to invest. And on the Mission 300, I'm so happy because it's really recent that we merged that last week in the talks in South Africa, that we are much more engaged now, and it's really the fundamental for us, and I think for Africa, to really get that access to 300. I think I'm happy that it came out so strongly here, because I think that's the base. There's many other things, but that is one of the key.
Let me ask you, before you put your microphone down, and I'll ask others to weigh in on this as well, if you wish, to look ahead to COP30. It is, as usual, being referred to as a landmark COP, and the vast majority of the countries that are party to the Paris Agreement have pledged to submit new nationally determined contributions for this COP. They're not on time so far. In fact, there's been quite a lag in submissions. Nonetheless, that is the plan, and these are NDCs that will look ahead to 2035. So how do you think this can make a real difference looking forward in steering investments into green energy systems? Can it have an impact, and what do we need to do to make sure?
So for us, I'm strongly believing it has an impact, and the more we can look ahead, the better it is. So we are preparing our NDCs. We are also slightly delayed, but that is the change of commission, and we are right now getting our proposals together. But we are already have in law the climate law to become climate neutral by 2050. We have an energy and climate framework for 2030. And in that wave, we will define 2040 very soon in terms of greenhouse gas emission reduction. We have a proposal of 90% reduction, which we still need to be confirmed by EU member states, and then the NDC will be our proposal in view of COP30 in Brazil.
And Dr. Jumkele, maybe I can also tap your development experience internationally on this. How do you think that national policies on renewables can best be aligned with finance mechanisms like this new collective quantified goal on climate, the NCQG that was agreed at COP29? It sounds abstruse, but it is viewed as a crucial mechanism moving ahead also for the discussions on finance at COP30.
That's a tough one. Generally, we are all working on our NDC 3.0. We all want to be ambitious. So I will say at the national level, most countries want to do more. The disappointment always, I've been to COPs now, I lost count as part of the system then with Ban Ki-moon. The disappointment is that, of course, each time we go, there's a new initiative, and we're all excited. And then the whole year, nothing happens. And then we go to another COP, and then there's another new initiative. So we're losing track of all the initiatives, and the funding does not flow as fast. And of course, the trust issue. Each time, each COP, the last 5 years, there's always been a code red, and then we have another big alert. But nothing changes, especially with those who are polluting the most. So even with this new index, some of us are saying, fine, it's a nice number, but I'm sure 3 years from now, we'll do another stock take, and we realize that nothing happened. So some of us, I was on the other side of this. Now I'm on the national side, sitting in the hot seat. So I know from some of our heads of states, they even question now, why should they always go to COP if it is one initiative after the next, but then we're told that the biggest polluters, they polluted even more. Emissions went up even more. Every year is higher than the last. The extreme weather effects are pounding us every day. We are amongst the most 20 vulnerable countries, in fact, the most 10 vulnerable countries. And so you wonder really if it's becoming effective. For Brazil, we have hopes that energy access will feature big for us. Because for us, energy access and the whole transition dialogues are a necessity because we are energy poor. We need energy to industrialize. We know everybody wants our critical minerals now. You mentioned 60% of the solar potential. Well, it's 40% of the critical minerals. Yeah, I'm chairing one of those subcommittees with Europe. So everybody wants our minerals, but I don't hear enough talk about beneficiation of those minerals so we have wealth in our countries. It's all about geopolitics of critical minerals. So there are these issues that worry us.
You will be very glad to know that we are going to address that issue in a panel in this room.
Please do.
And focus on exactly that aspect. So thank you very much for that very realistic answer on I will not even try to remember the acronym again. But the fact is, I'm reminded of Winston Churchill's remark about democracy, that it's a terrible system until you think about the alternatives. Perhaps one can say the same about the COP in many ways. Let me ask all of you in one very short last round to tell me what your top priority would be looking forward for fast-tracking Africa's energy transition. Just in one sentence, what would you say this is the most important thing that we need to do? Principal Secretary?
You have taken me back because there's something I just wanted to add.
Go ahead.
And especially in regard to
briefly.
COP, because we make pronouncement year after year. We need probably to even ask ourselves, do we really need to have COP after every 1 year, or do we need to extend so that we can take stock of what we have been able to achieve? Remember, I said this is a call to action. What I feel that is very paramount for us is we need the electrons to flow. That is our bottom line. We need to have 100% access to electricity by the year 2030. How do we achieve that? We need concessional financing to go towards grid infrastructure, generation, transmission, and distribution. Then after that, we can talk about these other things. Thank you.
Thank you. Dr. Junkele? Top priority?
For me, it's very clear. I need to make a deal with my colleague here at the EU to get my projects moving. I've been visiting Brussels for so long. Now I need to access Gateway. I chair some of those panels for the EU in Dubai. And we've been partners for a long time. I've chaired the energy strategy group. Now I need them to work with me so that 8 million people have access to energy. And we set that as an example that in 5 years, together with the new commission, we delivered something. One good African case where we achieved all our objectives.
Well, as we heard in our initial test word cloud this morning, networking is a key part of BETD, so you're going to have plenty of time to do a deal. Let me go over to Dr. Mazrumula.
I think the one word I want to say is trust. And I think this is trusting South Africa to do what we need to do to have access to renewables, to improve energy security. When I remember I used to work in the Department of Energy 2010 when it was like renewables is too expensive. But over the last 10 years, I think our share of renewables, our renewable installation has increased 300%. But that was by trusting South Africa to get on with it and do what we had to do, and we've done that. And even in terms of, you talked about regulations, we put in place structures and institutional frameworks to make it easier for private sector to invest in a liberalized energy electricity system. So trust us to do what we need to do and to put the technologies into the energy mix that we feel comfortable with. This is nuclear, this is gas, this is decommissioning of the coal-fired plants as they make sense, as they have to retire, but also trusting us to put the renewables in, because we didn't necessarily do feed-in tariffs. We said we need to make it competitive, and we actually help the rest of the world do it the best way. So just trust us to get on with what we're doing. Thank you.
Very nice. Thank you.
I think also to take maybe a step backwards and not look at all new initiatives at every COP, but really go back to electrification. I think that is the basic, and promotion of renewables and all kind of renewables. We heard about geothermal and others, hydro and solar, wind, where it makes sense. There's a huge potential, and I think these should remain the priority, whatever new initiative, and then cooperate closely with the countries directly.
Thank you very, very much to all of you for sharing your insights and for this very lively exchange. Greatly appreciated.